When it came to investing, Warren Buffett focused more on staying in the market rather than trying to time it, or making long-term stock investments. This investment proverb is a fundamental principle that can be found in practically all investing books. Here are the top 10 stocks for the next 10 years. Number 10. Smith & Nephew plc. The United Kingdom's Watford is home to Smith & Nephew plc, which was established in 1856. The business creates, produces, and markets medical equipment all over the world, including products for hip implants, trauma and extremities, knee implants, and stabilization of severe fractures. Smith & Nephew plc issued a semi-annual dividend on September 28th in the amount of $0.288 per average diluted share, which was the same as the preceding interim dividend. The dividend will be paid on October 26th to shareholders whose records were current as of September 30th. Smith & Nephew plc announced the dividend yield of 4.50% on October 11th. By the end of Q2 2022, 12 hedge funds owned interest in Smith & Nephew plc worth $105.4 million, down from 15 funds at the end of the previous quarter with stakes worth $135.3 million, according to Insider Monkey data. With 1.6 million shares valued at $46 million, Arrow Street Capital, owned Peter Rathjens, Bruce Clark, and John Campbell, is the company's largest shareholder. Number 9. BCE Inc. BCE Inc. is a telecommunications and media firm based in Canada that offers wireless, wireline, internet, and television services to residential, commercial, and wholesale clients. One of the top international stocks is BCE Inc., which just announced a quarterly dividend of 92 cents per share, in line with prior years. Shareholders who had their records in by September 15th will get the dividend on October 15th. On October 11th, BCE Inc. distributed a dividend yield of 6.6%. On October 10th, Barclays analyst David Joyce kept his equal weight rating on BCE Inc. while lowering his $51 price objective to $48. The analysis believes that Canada is a structurally favorable market with defensive income streams in a rationally competitive market, very supportive Canadian state policies, and reduced capital intensity that should increase capital returns. To U.S. cable and telecom, the analysis gives BCE Inc. the edge. Jim Simons' Renaissance Technologies is the largest shareholder in BCE Inc. among the hedge funds monitored by Insider Monkey, with 530,471 shares worth $26 million. At the end of June 2022, BCE Inc. was included in 12 hedge fund portfolios, up from 11 in the previous quarter. Number 8. Unilever plc. Beauty and personal care, foods and refreshments, and home care are the three business groups of Unilever plc, a global consumer goods corporation with its headquarters in London. With its products available in almost 190 nations, Unilever plc is one of the top international stocks to invest in. The company is essentially well known for its dividend yield, which as of October 11th was 4.27%. Investment consulting firm Deutsche Bank on September 29th kept its buy rating on Unilever plc, expressing a belief that earnings will continue to grow despite a slowdown in the European economy. Unilever plc is one of Deutsche Bank's top picks in the consumer staples industry. Tom Sykes, an analyst, updated the ratings. 21 hedge funds disclosed holding shares in Unilever plc, down from 23 funds in the prior quarter, according to Insider Monkey's Q2 data. The largest stake in the business is held by Tom Russo's Gardner Russo & Gardner, which has around 7 million shares valued at over $319 million. Number 7. Enbridge Inc. The corporate headquarters of Enbridge Inc., a provider of energy infrastructure, are located in Calgary, Canada. Liquids pipelines, gas transmission and midstream, gas distribution and storage, renewable power generation, and energy services are the company's 5 business segments. One of the firms with the greatest dividend yields is Enbridge Inc., which as of October 11th had a dividend yield of 7.36%. Enbridge Inc. stated on September 29th that it has agreed to buy Tri Global Energy, a U.S. renewable energy company, for $270 million in cash and assumed debt. The acquisition will support Enbridge Inc.'s North American expansion strategy and advance its renewable platform. Enbridge Inc. was raised by Raymond James analyst Michael Shaw on September 12th to outperform market perform with a $60 price objective, up from $57. The analysis argued that the company's basic outlook has improved and its prognosis for short and medium-term growth has increased. By the end of the second quarter of 2022, 25 hedge funds were long Enbridge Inc., up from 24 funds the previous quarter, according to Insider Monkey's data. The majority owner of the business is Rajiv Jain's GQG Partners, which has 52 million shares worth $2.18 billion. Number 6. BioNTech SE. A German biotechnology business called BioNTech SE creates and sells immunotherapies for the treatment of cancer and other infectious disorders. On October 7th, BioNTech SE declared that it had partnered with the Australian state of Victoria for the study and creation of possible mRNA-based vaccinations and treatments. On August 17th, Yaron Werber, a Cohen analyst, began following BioNTech SE and gave it a market perform rating and a $177 price target. The analyst informed investors that the company's Comirnaty is likely to keep its 60% share of the COVID-19 vaccine market, and that as the pandemic fades, the vaccine will take into account yearly flu trends. BioNTech SE's deep cancer pipeline is innovative but requires validation and is still early in development, noted the analyst. At the end of June 2022, 26 hedge funds were bullish on BioNTech SE, down from 29 firms the previous quarter, according to Insider Monkey's database. With 421,590 shares valued at around $63 million, Philip Lafont's Coatue Management has a significant amount of stock in the company. The finest overseas stocks to watch are BioNTech SE, Nutrient Ltd, Unilever plc, as well as Alibaba Group Holding Limited. Number 5. Garmin Ltd. Garmin Ltd was founded in 1989 and based in Schaffhausen, Switzerland. In the Americas, Asia Pacific, Australia continent, Europe, the Middle East, and Africa, the firm develops, produces, and sells a variety of wireless devices. The fitness, outdoor, aviation, marine, and auto sectors comprise the business of Garmin Ltd. It's among the greatest foreign equities in the current market to keep an eye on. Ivan Feinseth, a Tigris financial analyst, reiterated a strong buy recommendation on Garmin Ltd. On August 5th, but lowered his price target from $208 to $165, citing a near-term re-rating of value. He also referred to the most recent downturn as a big buying opportunity. The analyst is of the opinion that the sluggishness in the fitness and marine categories can be surmounted by the resilience in aviation and outdoor items, as well as Garmin Ltd's market-leading product portfolio. The analyst stated his revised objective, when combined with the current dividend yield, could result in a total return of more than 70% from the current price. 30 hedge funds were positive on Garmin Ltd. At the end of June 2022, according to Insider Monkey's data, and Ken Griffin's Citadel Investment Group is the largest shareholder in the firm, with 556,449 shares worth $54.6 million. Number 4. Ferguson plc. Ferguson plc, a British distributor of plumbing and heating goods in the US and Canada that serves end markets in the residential, commercial, infrastructure, and industrial sectors, is next on our list of the top foreign stocks. In keeping with its $2.5 billion share repurchase program, the business reported that between October 5th and October 7th, it bought a total of 77,470 of its common shares. At the end of Q2 2022, 32 of the hedge funds that Insider Monkey followed were long Ferguson plc, up from 18 firms the quarter before. Polar Capital, owned by Brian Ashford Russell and Tim Woolley, possessed the majority ownership in the business, valued at about $4 billion. Number 3. Argenx SE. In the United States, the Netherlands, Japan, Switzerland, Germany, and France, Argenx SE is a biotechnology business dedicated to creating treatments for the treatment of autoimmune illnesses. Argenx SE is a Dutch company with headquarters in Breda that was established in 2008. One of the greatest global stocks to watch is this one. On October 11th, Oppenheimer analyst Leland Greshel began following Argenx SE with a perform rating and no price target. In this way, the excellent early launch of Vyvgart, which was approved in late 2021 for generalized myasthenia gravis, confirms Wall Street's forecast of $3 billion in peak global sales. The analysis warned investors that although Vyvgart may be best in class, the anti-FcRn market is getting increasingly saturated. By the end of Q2 2022, 35 hedge funds were optimistic on Argent XSC, up from 31 firms the previous quarter, according to Insider Monkey data. The largest shareholder of the company is Venbio Select Advisor, owned by Kurt von Emster, with 1.26 million shares valued at $479.5 million. Number 2. Nutrien Ltd. With its headquarters in Saskatoon, Canada, Nutrien Ltd. offers seeds, crop nutrients, crop protection products, and other goods throughout the United States, Canada, South America, and Australia. Given growing potash and nitrogen prices, as well as alluring value, it's one of the top international stocks to keep an eye on. Nutrien Ltd. was upgraded by Scotiabank analyst Ben Isaacson on August 9th to outperform sector perform with a $110 price objective, down from $118. The analyst is bullish on Nutrien. He believes the stock has good value support. At the end of Q2 2022, 48 hedge funds were long Nutrien Ltd., down from 60 funds at the same time last quarter, according to Insider Monkey data. With 8.3 million shares valued at $668.3 million, First Eagle Investment Management, run by Jean-Marie Evelard, is the company's largest shareholder. Number 1. Alibaba Group Holding Limited. It is one of the best overseas stocks to buy right now in the Chinese e-commerce and technology company Alibaba Group Holding Limited. The most recent information on job opportunities, the labor market helped Alibaba Group Holding Limited and other Chinese tech companies rise in the first week of October. Alibaba Group Holding Limited's overweight rating was maintained by Morgan Stanley analyst Gary Yu at the end of September, although he decreased the price objective for the shares from $140 to $110 as he anticipated fiscal Q2 results. Due to the lackluster demand and poor merchant sentiment, the analysis expects CMR to decline 4% year-over-year in Q2, but believes cost efficiency will help EBITDA outperform expectations. In Q2 2022, 106 hedge fund portfolios contained Alibaba Group Holding Limited, up from 100 in the previous quarter. The largest shareholder of the corporation was Ken Fisher's Fisher Asset Management, which had 14.5 million shares worth of $1.6 billion. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.